We're here with Danny and Adam from Koinly. We're talking how to make your crypto taxes super simple. Danny, welcome, the head of tax, the man himself.
Thanks very much. Thanks for having us.
What's going on? Adam, the Koinly man.
Pleasure to be here.
Like your hat, my bro.
Thanks, man. Got the rocket on it.
So how much does the ATO know about crypto taxes?
Yeah, it's a good question. So the ATO actually have data matching programs in place with Australian exchanges. So those exchanges can report information to the ATO and reconcile it with what you have reported on your tax return. So it's likely the ATO will have your information before you even go and report it on your tax return. And also they'll reconcile what you put in your tax return to that information they've received.
So tracking trades, staking, how does that work with Koinly?
So essentially with Koinly, you can plug in all your wallets, exchanges, all your integrations on chain, pull down all your transactions that you've been making on all these various wallets and integrations into one place. So aside from just tracking your funds, your profits, your losses, your portfolio, you can also generate a tax report through that connection via API onto those exchanges. You can also upload spreadsheets into Koinly which have all your transaction history. But if you use an API connection, you can really get that real-time track of where you're at with your taxes.
Finder's exchange has just been integrated with us. So now people can export their transactions from the Finder products and get them straight into Koinly.
There's a concept called loss harvesting. Can you describe and tell us about that, Danny?
I think it's quite relevant at the moment. You know, a lot of people will be sitting on losses in their portfolio. Loss harvesting is a silver lining. It's a strategy you can apply when you do your taxes to actually realize your losses from a capital perspective and offset them against potential gains that you may make in the future.
Now, there's an important thing with crypto in terms of capital gains tax and holding for a period of time, and then there's a discount. Can you sort of walk us through, how does that work?
If you're an ordinary investor, capital gains will generally apply, which means when you make a profit, you pay tax, income tax on that profit. And equally, when you make that loss, you can offset losses against future gains. Now, each crypto asset, so whether it's an NFT, whether it's Bitcoin, whether it's ETH, each asset is classed as a CGT asset. And if you hold an asset for more than 12 months, you're potentially able to have a 50% discount on that capital gain. So it can be a really handy way to save on your taxes if you hold for a long time.
You know, if you don't sell, can you still do the 50% discount?
No, so you actually have to realize the sale. So it doesn't really apply to anything unrealized. So the same with loss harvesting. To be able to carry forward that loss, you actually have to realize the loss. So when you realize a gain, that's when you consider, well, have I held the asset for more than 12 months and whether the 50% discount applies.
How long do those last for? How long could those gains or those losses last for?
You look at things on a yearly basis, right? So at that point in time, you work out if you've made a sale in the tax year, have I held the asset for 12 months or more? And if you do, that then gets put into a long-term gains category, which is where you get the 50% discount, but you also got to consider it in the context of all your other gains. So it might not be crypto related, it might be shares, it might be a property, and that all gets lumped into your capital gains. And if you've made a net profit, that's the amount that you pay tax on or income tax on in that tax return.
Why Australia? Why has Koinly come here?
So we started in 2018 as 100% remote, and we looked at what markets naturally took off. And Australia, even though its population is smaller compared to other spaces, is like our second largest market in the world. We have hundreds of thousands of people here using our product all the time. So I spoke to the founders at the early part of the year, and they asked me if I'd be interested in setting up the office here. 33 people on George Street now with customer service, marketing. It's been pretty wild.
There's a little changing regulation right now in Australia, or there's movement. What do you guys see as important, and where do you want to see some changes?
Obviously, tax is just one facet of regulation, and we're seeing regulation apply as a whole, with exchanges, financial services in the crypto space having to embrace regulation, and we know it's coming. In the tax space, the ATO has issued guidance in that area. So there's guidance on how you should pay your taxes from an investor's point of view, but also from a trader point of view. What we're likely to see towards the end of the year is a bit more guidance by way of a Board of Taxation review. That should cover some more of the complex interactions around how we trade crypto.
I think something that's important to mention as well is cryptocurrency is doing like a lightning run to kind of replicate the banking industry, which had 200 to 300 years to be able to build like these regulations out. And now that we have like modern technology and the blockchain and so many different options here, the government's still playing catch up and still trying to understand like what is the impact that this can have.
I think what's really important for the industry now, and as more and more professionals come into it, that we create sensible regulation that doesn't necessarily stifle innovation that blockchain and technology associated with it is trying to create, but actually have sensible regulation that allows the industry to progress, that allows people to build and innovate, particularly in bear markets.
You talked a little bit, Danny, about NFTs. NFTs are pumping right now. Everyone's flipping JPEG, love it. What is the deal with that? Is that a capital gain, or what is that?
There's definitely a misconception out there that, if I'm holding NFTs, it's not taxable. I don't have to worry about it. It's online. It's cool. No one, nothing to see here. But NFTs are definitely taxable, and the ATO have actually come out and said, if you're trading NFTs, they're classed as crypto assets like Bitcoin, like your coins and tokens that you might hold. So with NFTs, it's like any other capital asset if you're an investor. If you've sold an NFT for a profit, you're likely to be paying capital gains on it.
If you're a trader and you're trading lots, or you're just buying and holding as an investor, is there any tax implications to that?
The first question is, whether you're trading as a business or as an individual investor. And there are all sorts of factors that can tip you over from being an individual investor, which is treated under capital gains, to being a business, which trading platforms apply. So different tax regimes. And so there's different factors like volume of transactions, whether you have a business strategy in place. I think there's different things to consider there in terms of what tips you from an investor to a trader. But the key thing is that there are different tax rules that apply. So really working with your accountant on that is going to be important.
Adam, what's coming up for Koinly in Australia? What's on the roadmap?
We got some pretty awesome product rollouts happening. I mean, it's been an exciting year for us, especially with a lot of the advertising campaigns that we've seen going out. We've just launched like local customer service, B2B phone lines, so that we're working with accountants to provide a software for accountants for them to be able to facilitate helping their customers with tax transactions. But we've got some pretty cool products in the work that's going to help expand kind of what we can do. But we're seeing a lot of people really wanting to do their taxes this year. It's kind of interesting. So with Finder, we did some advertising recently, and we put out a code, which was it was a Finder 22 code, and it went within like less than a day of like 1,000 free reports. So much so that we did a secondary code and it went again. So what we decided to do today is to give out like another 2,000 codes, split between another video that we're doing with you, and one for this video, which will be Finder YT22. And customers can get free reports. So it'll be 1,000 free reports, 30% off after that. But what we're seeing is every time we release like a code or a discount like this, it just disappears.
And for everyone else, if you want to watch more videos like this, do subscribe and do follow us. That's the Daily Exchange, guys. Yeah.